Hey guys, I'm Jen. Welcome back to Blockchain Banter Trading Crypto. It's been a couple of weeks. I'm really excited to get back up here. I've got Keith Allen with us, co-founder Material Indicators, TA and Algo trader, order book analyst, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Thank you guys so much. Welcome back. Like I
Oh,
said,
it's nice.
happy
It's
to
it's nice to have the band back together. I wish Koryo could join us.
I know. I
I
saw
miss
your
him.
tweet actually when you said the band is getting back together, and I was like, it's the perfect way to say it, you know? Like I love our calls. I love when we all can get up here and just kind of shoot the shit and bounce, off of each other and really compare what we're seeing in the market and what our thoughts are. So it's been a few weeks. Mark, I was actually thinking of you kind of on the off weeks because the last we spoke, there was suspicion of there being some drawdown and kind of maybe going back into the 50s. And we were saying, so many people look for these big movements, like moves all at once, right? And you kind of busted out what was it, an Excel sheet, and you're showing us like, here's, 2% at a time, 2% at a time. And as I'm kind of watching this happen, I was thinking of you and wondering, like, where is this going to actually take us? And maybe Keith, maybe you wouldn't mind. I know that you're constantly, doing really, really in-depth analysis on what you're seeing with the liquidity, with the order book. Maybe you can just kind of give us a recap over the last couple of weeks. And Mark, anything that you want to add, to that, please do, to just kind of bring anybody just up to speed, where we're at now.
Well, Mark was absolutely right about the drawdown, and it was kind of a grind. And then, the for lack of better terms, the shit hit the fan for a moment. And we say this a lot, like the market is testing your conviction and it's shaking out the weak hands, and that is, that's never going to stop, right? So I'm going to start. We're going to get to the liquidity in a minute, but because that has really, in my opinion, been a big part of what we're seeing here in the past few days. But I want to start with the candle chart because we've had some really interesting developments and in my opinion, some significant retests that have kind of changed the dynamic here a bit. So let's share screen.
I'll bring it up when you're ready. There we go.
Okay, so I'm on the weekly Bitcoin chart right here, and anybody that's been following me along, I've been sharing this chart for a long time. This is the one we had all the halvings and we went into all that stuff, and this isn't really halving related at this point. We know what's what with the halving, and we've talked about the potential for deep corrections during halvings, and this certainly being no different. So we were trading up here, and we created this new all-time high. And actually way back in March, I identified, what looked like a cup and handle forming, but at a major macro level, right? From the prior all-time high, up to, here where we created the new one. You can kind of see the formation here. I'll add the geometry back in for those who have a hard time like me. And you can see that this is forming. Now, it's not yet a confirmed cup and handle because it has to play out, and it hasn't played out yet. But it looks like the structure is coming into play. Like, so the cup is obviously formed, but will the handle play out? And as you can see, we do have a nice handle developing here. And characteristics of a handle in this technical analysis, the handle needs to be more than a week long. Certainly on one that's at this point. At this point, we're looking at 2 years and 8 months. So this is not your ordinary cup and handle. This is mega macro cup and handle. Okay. And so if this does play out, there's going to be a significant upside to it. But what shook the market here wasn't that we made this new all-time high early. I mean, that was a bit of a fake out here. And some people will question whether this invalidates the cup and handle. And I would say it still stays within the range of tolerance that we haven't invalidated that cup and handle structure. And then the second problem was when we lost this trend line here, right? So we had this nice trend happening since October of last year. where we really started clearing these consolidation levels, right? And we had these single candles up that never got retested. Then we went up to this 40 to 45K range. Single candle up, never got retested. Briefly in this 50 to 52K range, single giant celery stick never got retested. And so, we thought, hey, we tested this range of prior significance, and that's where we would hang for a while, and maybe this will hold. And then ultimately it didn't, right? So the progression and the breakdown, which we can see on the daily time frame with even more clarity, and I'm going to clear out these trend precognition signals so we can make it a little less noise on the chart. I realize I got a lot of junk going on here, guys. So what you can see here is that we lost these key moving averages here, right? It started with the green 21-day moving average, and then the blue 100-day moving average, and so on and so forth, right? I think I'm missing one. Looks like there we go. There, let's put the 50 back in. So we lost the 100, the 50, and then we lost them all, right? So this was scary here. Then okay, well maybe the 200-day will hold as support. And when this broke, that's when people really got concerned. And the Mt. Gox FUD started coming through. Hearing about Germany selling coins started coming through, and before really a ton of that even happened, the market did this to itself, just on its own FUD and speculation, and which also is something that's never going to go away. Today, I saw some news that Kraken has actually received Mt. Gox distributions, and that they will be distributing those to their creditors over the next 14 days. So we can expect some of those coins to start hitting the market. Not all of them I wouldn't expect, right? Those people are all in fat profit. But if there's more upside coming, sure, take some profit off the table, because you're probably rich at this point, and do what you will with the rest. So in terms of this recovery here, there were two things that I've been watching very, very closely, and I want to show them to you in chronological order, because to me, this is what kind of paved the way for the move that we're seeing now. The first one is the weekly RSI. And Mark, I know you remember this, because I slipped this number to you a while back. This 42 level on the RSI. That's the green line here. I'm going to enlarge this. And for anybody who's not heard this before, on the weekly RSI for Bitcoin, this just kind of serves as a benchmark for me. Anytime price is at or above that level, we are in bullish territory, uptrend or trending upward, I should say. And anytime we lose that level, we're trending downward. And it looked like we were on a free fall for that. And losing this trend was a concern. And we started plummeting fast. We made it down to 45 and change. So yeah, there's still room to go. We could conceivably still retest that level. But this V-shaped recovery right here was very, very interesting to me. And this is the first thing that I saw. This happened right as price was dipping into that 53.5 range, right? So that was that the low? 53.5 right there. So, I think to maintain that level, we still need to see price hold above 50K. Maybe there's that 48K level, which has some significance. And the reason it does is because of the confluence, right here between these weekly closes. If we were to extend past 50K and wick into this 48K level, I would want to see a pretty quick recovery on the weekly, right? I'd still like to see recovery above that so that we maintain that level on this RSI. If we wick down below there, that's okay, but I literally, as we were free falling a few days ago, I had literally was writing the analysis of this death cross is inevitable. And I thought that we weren't going to get out of this, but the death cross I'm talking about happened here, or seemed like it was inevitable on the daily time frame between the 21 and the 200-day moving average. And I thought I thought it was all for naught. And then, I hate to say it, the shot heard round the world. Literally at that moment, we started growing candles. I mean, I was looking, I happened to be on Twitter at the time, and I was fumbling between charts and, looking up some stuff online. And I saw the news about Trump, and within minutes, I saw a post, 10 million in Bitcoin just went to Trump. And all the Trump meme coins started popping. And, set the politics and the policy aside, it seemed to be a catalyst that I couldn't help make the analogy between what it was me. When I did an analysis last week when we were on this, just looked like this was imminent, and it looked like that RSI was going to test that 42 level. I was like, this is like the Biden campaign. It's looking weak, and it needs to bounce and show some strength here, and it wasn't happening. And then this is like the Trump campaign that was starting to dwindle and worry about jail and all these things, and then suddenly, bang! In one shot, everything turned around in one candle. And
I actually saw it referred to as the Trump pump. And I was going to ask you if you really, what your guys' thoughts are. If this, I mean, I saw the meme coins.
I hate that name. I'm sure that's very popular in Arizona.
Politics aside.
All politics aside. But hey, there's no denying that that might have been a catalyst. Nonetheless, the catalyst is speculative. The technicals that we see in the charts are undeniable. Okay. So we did revert from the 42 on the weekly RSI. We did avoid narrowly, I mean by like a day or two, narrowly avoided this death cross. And let me tell you about this death cross between the 21 and the 200. It never ends well. Or let me rephrase that. In history, it never has ended well. Doesn't mean it always has to be the same, but every single time that those two levels have crossed, the green, we're talking the green 21 day and the purple 200, it results in a deep correction, right? Here it was here, back in 2018, it was recovered. Here it was here, back in 2019, recovered briefly, took us into the COVID era. And, again, up here, back in 2021, you lose them, you're going deeper. So I was really concerned that might be happening. And, we avoided it. Same thing, top of the 2021 market, right? Once those crossed, that was the end. As far as I was concerned, that was the last validation that the bear market had started for me. And so we nearly experienced that here a couple days ago. So those are the two technical things that I saw that said, hey, these are real technical levels that indicate that sentiment could be changing here, right? Now there's still room that we could go back and retest. Absolutely. Doesn't mean we can't go back to 53. Doesn't mean we can't go back to even this 48 level. As for me though, as long as these don't cross, and this is what changes this level a little bit for me, right? I don't want to see us lose that 42 on the weekly, and losing 50K would do that. However, if we went to 48 and still closed the week above 50K, I'd be okay with that. But this death cross right here, this is something that we need to, that we also need to avoid. Now it could happen and it could recover very, very quickly, but hasn't done that in history, not once. So those parts of the technical analysis, I feel pretty confident in. Now there's this cup and handle pattern, right? And for this to actually validate, it has to resolve as the handle has to fully develop, and we have to see it eventually make its way out the top. So that hasn't happened yet. The characteristics that we look for are we look for declining volume on the downtrend, which we had, right? Here's where we peaked. We had declining volume, and then we look for increasing volume on the uptrend, which is now started. Okay, so we need to continue to see increasing volume on the uptrend, and we need to see it eventually resolve to the upside with a new all-time high. So in terms of that, let's now go to liquidity in the order book, because that's what everybody wants to see here. And that also has been changing. You can see a lot has changed here, right? Look at all the time we spent here in this. Let me even zoom out a little bit more. All the time we spent where there was just nothing going on down here, and we had heavy stacks of liquidity overhead, right? In that 70 to, especially in the 70 to 75K range, right? But over time, a lot of that has dropped its way into the active trading zone, right? So, we were heavy here, things thinned out, we made it back up, then things got really, really heavy and hard to break here, just impenetrable for the market. We saw things thinning out below, and price eroded. Now we saw some liquidity. Recently, we saw some liquidity move into the 40K range, which was interesting. We say liquidity equals sentiment. So we saw that, which was interesting, as we saw this drawdown happening, right? You notice when this appeared as things started getting scary down here. Well, at this point, look at what's happened here. Look at what has disappeared from this range and what's moving in this range. And we'll go into some lower time frames so you can see it better, but just in a grand and in a big picture view, you can see that this largest concentration up at this like 72K level has a lot of it has been pulled, and some of it has moved up, and some of it is gone. And so if we move down into lower time frames now, you can see that over the past few days, there's really been a lot of movement in here on both sides. So bids are moving upward, asks are also moving upward or getting rugged altogether, right? So now we're seeing, on the higher time frames, we're seeing some stuff stack in the 80K range. This time frame doesn't go there, but I can show you that in a minute. But a lot of these concentrations, right? It's harder to clear a heavy, thick wall, with 70 with $40-50 million in it, than it is to clear through ladders with smaller concentrations, right? Because price can work its way through and it gets absorbed. So I expect to see, just because this was pulled doesn't mean it's a straight shot up, but it's making the pathway a little bit easier, in my opinion. And, even though we know that Mt. Gox coins are coming in, right, over the next 2 weeks, we're going to see more liquidity come in on the ask side. That's going to add to the friction, moving up. But I would maintain that it's in those Mt. Gox creditors, it's in their best interest to do what? Is it in their best interest to dump the market, or is it in their best interest to get the highest price they can for their coin? And so I don't have any evidence that this is ladders of Mt. Gox creditors distributing coins, but those are the kinds of things I expect to see. These are the kinds of characteristics I would be looking for in that as that event happens. And as long as price continues to stay up in this range, I'm good, and I'm good if we do this for months longer. But the fact that some of these big barriers that we've been staring at literally for months are now moving upward, and look, boom, you clear one, and then you move on to the next one. So, the fact that we have a void down here means that yes, we could go right back down here to 61.5 and take that dip and go at it again, or maybe even go lower. But I think ultimately, just based on all of the things that we're seeing, I think that eventually we're going to see this thing resolve itself into a fully developed and validated cup and handle. Obviously, we can't say it's happening yet because it hasn't happened yet. And so the question is, are we going to go, we know we have resistance here at the 21-week moving average. Are we going to grind through it and go out like this, or is it going to be a move that's more akin to this and this and this? Maybe we even go down and test this support line. Look where that is right now. That's at that 48K level that we just talked about. So, I don't know if it's going to be a straight shot out or if we're going to go back and retest these levels. Whatever the case may be, it won't let go. Whatever the case may be, I think that ultimately, just based on all of the fundamental things that we're seeing in the order book, and the fact that we're still seeing ETF flows do very, very well. We've had a bunch of consecutive days of positive flows when we were in the sub 60K range. Yesterday we were in the 60 plus K range, and another very robust day. So there's still plenty of appetite to buy at these levels, and probably because the upside potential of this move, a measured move, and you guys know I hate throwing out price targets. I hate throwing out those long-term price targets, but strictly based on technical analysis, to do this measured move on a cup and handle, you draw from the top of the rim to the bottom of the cup. So since this is such a long period of time, I'm on log scale. So in that case, we do it as a percentage. And so this looks like a 77% move to the downside, on the depth of that cup. So as that translates into an upside move, that's going to be, and there might be some discrepancy on whether I draw this from where my rim is on the original top, or if we draw it to the new all-time high as the breakout. Either way, you're very, very close. We're somewhere in that 122, 125K range, and this is, guys, this could take months and months and months and months. We're well into next year to ultimately develop to that, but that's the upside target from this structure if it indeed validates. And for it to validate, we need more volume, or I should say, a steady increase of volume, and for it to resolve into a new all-time high. And that would be the price discovery point at that point.
Keith, I've got a question for you. Oh, I'm sorry.
Yeah.
You were talking about that death cross earlier. I didn't want to interrupt you, but seeing that we got so close to it, to where you're actually like tweeting this out and getting this all ready, right, with your analysis. I mean, how you're going back to 2017 and looking at when this has occurred and the outcome of it. You could go back to the
birth of Bitcoin, and it's going to be the same thing. Okay,
there we go. Okay, what about, have you seen instances where we've gotten that close, and turned this around and haven't gone back to where that was before? Or historically, are we expecting to quite possibly get back to that in any sort of short period of time?
So historically, let's take a quick look. Historically, I don't recall any events that have made it that close and bailed out. Let's see. Here we go. So this one tried to recover relatively. Relatively quickly, right? And it did for a short term, but it was a fake out, right? This was a distribution rally, right? But it didn't actually resolve, right? It broke here, attempted, came close on the recovery, but failed. Again, another breakthrough. Again, another breakdown. So no, we haven't seen. I've never seen one. Okay, here's a close one. Here's a close one with a short term. Right? Never say never. Just like never say never without actually looking. Okay, so here's one that resolved itself pretty damn quick, and it's noteworthy when this happened. This is September 2021. We had already Okay, so this has a lot of similarity. Actually, I'm glad you mentioned this because this has a lot of similarity to some historical importance. This was what many technicians call the real top of the 2021 market. Okay, this is where the distribution began, and we lost that level, and then distribution rallied back to get it back to the new all-time high. But this is why we have this red box here, right? So,
Yeah.
so what you can see here is that after this breakdown, there was indeed a recovery, short-lived, and then lost it again, got it back very, very quickly before moving into the all-time high. So this period right here was between September 30th, we'll call it October, and November. So that was a month. Ever since then, are there any other incidents like that? I don't.
Are you thinking that could be, we came that close and now what could follow is that month that we saw in October?
Hard to pin a time frame to it just because of the fact that so much has changed in the market since then.
Of course.
But could this potentially present itself as the distribution rally? It absolutely could, right? I mean, this could, right? And in that case, this could peter out, not make it to that 125K level, and maybe make a new all-time high and then collapse. That would, of course, invalidate the structure here. It shows you that there's no absolutes in this game. But
so what do you keep an eye on then to kind of say, okay, it could go this direction? And Mark, you too, because I know you do some TA as well. But like, what do
I
you
keep an eye on
keep
is
an eye on?
volume and liquidity. Okay, so the big differences here are, let's look at the volume. Okay, so we had big volume coming into this market. We had distribution, and what was the volume like during this period? It wasn't really that great, right? It really wasn't massive compared to what we were seeing before. And then next to that, so at this point, I'm going to want to see volume continue to grow, right? We saw it start to diminish on the downtrend of this handle, and I want to see it continue to scale upward. You can see it's trending up here. This is like this shaded area is the moving average on the volume profile. So I want to see that continue to scale upward until this resolves to the upside into a new all-time high. That's one thing I'm looking at. And the other thing, of course, that I'm always looking at is the liquidity and whether it appears there or not and continues to hold things up. So, in a lot of these, something else worth noting is in a lot of these other mass distribution events, like when we had the Silk Road distribution from the U.S. government, et cetera, we sometimes see big buy walls or big, blocks of bid liquidity come in to prop price up a little bit. Now, certainly we couldn't say that the U.S. government would be the one doing that, but somebody has some interest in keeping those prices elevated for those distributions. There's a lot of people interested in keeping the same thing with the FTX distributions. We saw Solana get propped up pretty well for that distribution. So, maybe we'll see that materialize as more of that Mt. Gox coin comes to market. But in the meantime, as long as the bid liquidity keeps coming in, I don't mind seeing these ladders of asks because, the market can absorb that. ETF demand can absorb that. Now, we may see this Bitcoin ETF demand start to shift a little bit. I saw news today that next week on Tuesday, the ETH ETF is going to hit the market. So we might see some portfolio rebalancing relative to that.
We have a couple questions actually from some viewers about the ETH ETF.
All right.
One is asking the impact of Grayscale ETH ETF outflow.
Okay.
or the
Well,
ETH outflow.
for anybody that wants more in depth on that, that cup and handle structure and what I've been seeing here, I think I shared with you a link to that analysis from the other day, Jen. So you can share
Yeah.
that with the community if you like. But other than that, I think I'm encouraged by the fact that we still see robust ETF demand coming in. Once we reclaim this 60K level, and we'll see what happens today. I think the markets, I still don't believe in up only, but I do believe that ultimately the long-term view is unchanged, that we will have a new all-time high.
Yeah. Awesome. Keith, you are wonderful as always. Thank you so much. Anybody, I know that we had a lot to catch up on today and we have some questions here. I'm going to pass it over to Mark and then I'm going to circle back and kind of bring up some questions and some comments from the viewers also. Mark, do you have anything special planned for us today? I know, we haven't had a chance to talk about, we're looking at a different possible ways that the market could play out, right? So I'm kind of curious if you have anything to add in terms of how to actually, like how you would play this out. Oh, I see you're sharing your screen. I'm going to bring you up. Hold on.
Yeah, sure.
Okay.
So yeah. I'm gonna keep my arguments consistent because it's been a few weeks and I wanted to revisit some of the things that I've said. I do. So one of the things that I do want to point out is that I do expect something like a cup and handle pattern to play out on a fairly long time frame. So for example, if this is the cup here, then so be it. And then I am expecting something like this before we head higher. And so the question is, how deep can this capitulation be on the handle before we do that? And different analysts have sort of different rubrics that they use to evaluate the likelihood. But I still want to pay attention to what I'm seeing on the MACD because at the moment, if the price was to go higher from here, it would be unprecedented, right, in Bitcoin's history. And so let's just again revisit that claim because I think that it is sort of one of the more significant indicators that we're seeing. And for transparency, I think I'm using the Bitcoin USD Coinbase chart, and this is the weekly time frame. And so what I'm looking at here is like, when the MACD crosses bearish, right, which is traditionally called a death cross, which I think sounds a little dramatic, but whatever. Historically, Bitcoin has never had less than a 50% capitulation, right? And so here we're seeing, and this is going way, way back when Bitcoin was a lot more volatile than it is today. So this is the end of the 2017, blow off top. But this was a 67% capitulation after this death cross, and even then it had a little bit farther to go. And then we had a death cross here on August in 2019, and this capitulation was a 52%. And then after that, we had another death cross heading into COVID, which was this huge one here, which was minus 62%. We had a death cross here at the what we just heard Keith refer to as the technical top of the last bull market, because a lot of people don't really trust these other prices, and I know why. But yeah, this was another death cross on the MACD, and this was a 52% capitulation. And then on this fake top, even before the bull market really started, was still 49.9% drawdown before we actually broke support here and went even farther down. So even breaking these up into little pieces, like this is still 60 something percent, and this is still 50 something percent. This is still 50%. This is still 50%. And every single time Bitcoin has done this, what I'm saying is that this is an undefeated indicator. And so if the price was to turn around here after this death cross, after only a small drawdown, it would be the first time in Bitcoin's history that it's ever done that. So just keep that in mind. And then on top of that, we're also seeing other bearish indicators, right? So for example,
Mark, sorry to interrupt.
Yeah.
Can you just say again what would be the first time in history?
Oh, so for the fast moving average to cross beneath the slow moving average,
right?
When we're up at these, in these elevated levels. Yeah, exactly. And so you saw that we've had basically a 2-year run on Bitcoin, and the MACD has gotten very, very, very high. And so yeah, and we did get the death cross, back here in May. Which was when I said that we should start expecting the drawdown, and it's when I started to say that I actually have extremely high conviction in the drawdown levels that I'm anticipating here. And this is when, actually while you were speaking, Keith, I reproduced the spreadsheet from a few weeks ago just to see, where we are on track or not. Because, as Jen said, if you're projecting a constant 2% or 4% or whatever it happens to be drawdown, and this is only over 11 weeks, and 11 weeks I choose because it happened to be, about as long as these drawdowns from the peak of the last bull cycle. But you can actually go a lot longer than that. So for example, this drawdown happened over 47 weeks. And so we could have something like that happen here as well. Not necessarily saying that 11 weeks has to be it, but we are expecting, if it is going to complete over this time period, which would take us into the 26th of August, that about a 4% drawdown average on week would be about what we're expecting. And so I did show people how to create this kind of geometric sequence. And then all I've done this time is just sort of draw that out and then just have a look at how the price of Bitcoin has behaved at the close of the weekly candle compared to what I was saying that would be reasonable. And you can see we actually got ahead, like the first data point was like right on schedule. And then we started to get ahead of schedule, right? And so the price actually started to draw down faster than what I was expecting. And then it picked up a little bit. We got very, very close to projections here. And now the price has actually rallied. And I would call this a relief rally. But you can see that this, like what I am stipulating is going to happen is that this will basically oscillate, on the way down here. And this is with a specific price target of around 44,838, which I think is probably a very, very realistic price target. And I can get into why that is. But let's just have a look at the rally that we've seen today. So since I started telling people that we should prepare for a really significant, move down, we've already completed, we did complete a 24% drawdown, from the top of these candles up here, at least to the wicks. And you can see that we've got a relief rally happening now. But if we open the SMA, you'll see that we're actually getting rejected off a very key technical resistance level, which is the 20 or the 21 SMA, as you wish. I'd work on the weekly time frames. There's very little difference between 20 and 21. And on the EMA, you see that it's actually trading a little bit above it. So we're gonna have to wait and see how this plays out, in my opinion. But what's interesting is that one of these key levels that I had drawn, which is at 51, is around about where our 50 SMA close is hovering at, or just beneath it. And I think it's for the EMA, it's about right on schedule. So I do expect that we're going to get rejected off of this level just because of the confluence of factors here, and the fact that we are still steepening in the MACD and that the RSI is continuing to trend lower. So this isn't a reversal pattern. This is now a continuation pattern. It's a bearish continuation pattern. And I am looking for support at this level at 51. I think that this will be the first test, and my conviction is that we are going to fall beneath it very quickly. And I'm looking for this level here at either at 41 or at 44, and I've got no idea which one is more likely.
Over the next few weeks.
Yeah, I think that this will be, if I reach my most optimistic price targets, then, I do think that we can come further down. So let's have a look at what a 50% drawdown would actually look like. And yeah, it comes basically right to this technical level at 33.7. So if we do get an event like this one, like this one, like this one, like this one, or like this one, then we should be expecting, and which, by the way, is every single time that we've had a bearish cross on the MACD at these levels on the weekly, then we are expecting, this most optimistic price target to play out. Now, what I'm saying is that it would be unprecedented for Bitcoin to not go this far down, right? That so far this particular indicator has a 100% success rate of predicting a 50% drawdown. But that's not to say that we aren't in unprecedented times.
What was the drawdown target? Do you say 50%?
37.
50% drawdown, and so price target is going to be somewhere around. Well, here, let me get a more accurate reading because I called it from the open of the weekly candle back in, when's that? The 8th of July. So 52% drawdown would be to this 33 level, yeah. And so 52 is around about the average. You know, some of these are much more, you know, I don't like the price data from sort of before 2020, just because Bitcoin was like super volatile back then.
Right.
But I'd say the market was relatively well established during the top of the last bear market. And yeah, these drawdowns were pretty significant. So so this one here, again, taking it from the open, just zoom up.
Now, forgive me for asking this. This might seem like a silly question, but you know, you're looking at this cup and handle from, what did we say, 2 years, 8 months in the making?
Right.
Yeah, yeah. So this would actually be a
this-
terrific cup and handle if it worked, right? Because the
Right,
cup
but
just has to be
Mark-
deeper and longer than the other one.
Right. So I think and don't hold me to this. Some technical guru could if somebody has some technical analysis expertise on cup and handles and wants to chime in, by all means, please do. I think the depth of the handle could go as deep as 2/3 the depth of the cup, and
That's
still
what I was asking.
and still
Okay,
maintain.
so if that would
Okay,
invalidate
so that would be well within that tolerance. And
Okay.
if we look at the longer term trend line, you know, at least from the uh, from the from the from our bottom at 15.5, right? If we look at that trend line from that FTX crash bottom, right now, 42. If it were to happen this week, 42 stays above that trend line, and anything below that breaks that trend line. So you know, as I mentioned earlier, the technical things that I'm looking at are to maintain, uh, you know, avoid the death cross on these two moving averages, and to avoid dipping below 42 on the weekly RSI. So those are some factors. You know, everything that you said is valid, and that's a valid indicator, just as these are valid indicators. It's not unlikely that one of them or more of them invalidates before this resolves itself. And those are the things that, as a trader, you and a technician, you have to watch, right?
Exactly. And it's important to remember that we're not, like, these aren't laws of the universe.
Right.
You know what I mean? It's not like these are physical principles or something. This is
Right.
just pattern rate. We're literally we're reading. This is astrology and tea leaf reading at the end of the day. We only try to identify, you know,
don't forget to sprinkle in the manipulation that happens in this market too, right?
Exactly. Yeah, I'm just trying to understand, you know, how markets behave, and, you know, how can you keep your finger on the pulse of it. And
So
I agree with
I think that I think that's a valid target, right? And a valid point. But I would say the things that could invalidate that would be a deeper retest than we had, actually getting down to that 42K level. I mean, that 42 level on the weekly. We made it to 45, I think, right? So we got a little bit of room. So in other words, a deeper correction, probably closer to the 40% range than the 50% range, that we get a hard bounce from. And likewise,
exactly.
if we do penetrate that level and we do go sub 42 on that weekly RSI, then I think then we do see a deeper correction, because that's what that suggests. It's a matter of how long it takes for that to recover.
Exactly.
Pete, remember a couple weeks ago? Oh, I'm sorry, Mark, go ahead.
No, I think one of the things that people often get wrong is that they mistake bullish reversal pattern, like they mistake bearish reversal patterns for bullish patterns, you know, and vice versa. You know, like, for example, what this looks like it could be, and let me try and zoom up on this a little bit more. For example, you can see that this might already be setting up for either a broadening descending wedge, which is a bullish reversal pattern. We'll have to wait and see how some of these things play out, because this could also just be like a bull flag,
right?
But we'll see how this goes. But, you know, you have to give these things time to actually print a bullish pattern. The longer these things keep going up unchecked, the more and more, like, the more bearish I get, and the more bearish I wish more people would get. But but yeah, like this is, I say this stuff as if, I know that many people will think that I'm sort of doomsaying or something, but no, this is, I think, a natural consequence of having a 2-year up only, pattern. And to give it time to sort of,
and we said every step of the way, these levels have not been retested.
right,
And
exactly.
they should. Doesn't mean they have to, but they should. Okay. So many of them still have not, most of them still have not been retested. They don't have to, but they should. We now have a CME gap, right? Where's that? Around 53, 52, 53, 54 range, something like that. Here we go.
I've never paid attention to the CME gap.
I really didn't either. And then this happened and somebody said, oh, we got CME gap. Well, where's that? Well, that's a reasonable retrace back to 58. That's nothing. Right. I wouldn't even blink at that. I'd be very happy to buy it, to be honest with you at this point, unless I see something change. But in terms of what you're looking at, we know that Mark has been saying for the longest time, he's not interested in buying anywhere near these levels. He's patient. He's disciplined. He's looking for those 30s and those 20s, which he may or may not get. And if he gets them, he's going to look like a genius. He's going to, we know he's got powder stacked for that. The question is, will he see the signs?
Will I get what I want?
Will you get what you want? Because trust me, I want 48. I'd be very happy with that, and a bounce from there. And if we lose that level, sure, I'm happy to buy lower, but then I got to start cutting some things. So with where we sit now, it's how you manage your powder, and whether you want to consider scaling in at certain levels along the way in case your target isn't reached.
That's what I was going to ask. Looking at all of these different targets, we're talking about how it could just play out in this sort of ranging motion, right? Before going up, Keith, to the 80 or, whatever it was that we were saying earlier. Or it could turn around and retrace back down to 33 to 44, something along those lines, right? So how are you guys playing this? Are you looking to, Mark? I don't know if we're hitting those 20s that you were calling for, but the 33 that you are now, are we looking to scale in any specific ranges?
For Bitcoin, Bitcoin is relatively, you can trade it relatively predictably if you just buy when it's oversold and sell when it's overbought, right? So like I did buy Bitcoin somewhere around here. I remember I didn't buy as much as I would have liked. I was not very cash rich back then, but I did buy. I did make buys during the bloodbath here, and had to white knuckle as it continued to capitulate down. But I have not been interested in buying at all the way up through this range, just because it's been too optimistic a market. Right, I prefer pessimistic markets. I find them much easier to trade, and I also didn't sell any. Right, so I bought the Bitcoin back here, expecting to sell it the next time I see overbought, but I actually haven't yet, because I was expecting to see a more significant all-time high, and so that's fine. But I'm also not buying. But if we come down here, and I do see us return to these oversold levels, that's usually my indicator, right? When things are going bad, when people are feeling defeated, that's when I become more interested in participating. But yeah, there's no technical level or something that's going to make me interested. It's really about people's pessimism that I think triggers me to do something.
Okay.
Speaking of which, the ETH Bitcoin chart has played out really interestingly, right? I remember we drew these.
Before we move on, Mark, I brought up a question from a community member. They were from a viewer. Paul, thank you for your comments and your questions. All those bearish impulses had triggers, things that you guys were looking at, talking about previously. What macro events could trigger it now?
Oh, I don't think it's triggered at all. I think that it's the other way around. I think that the market will do something, and then people will find a reason for that thing to have happened. I think that it's an ad hoc justification. I don't think that these things are actually causally related.
So when Keith was talking about this whole thing with Trump and everything else being a catalyst, do you not think that that's related?
No, I
Well,
don't.
yeah,
But
I mean, I mean,
Possibly,
it's
Keith.
speculative. Like I said, it's speculative.
Right.
Yes, we're speculating that, you know, as soon as that shot was fired, we saw, you know, Trump meme coins pumping and Bitcoin pumping.
We did.
That's speculative. What's not speculative is what happened in the charts, the reversion of the RSI, the
Right.
avoidance of the death cross. Those things you can bank on. We can get 1,000 opinions on what caused it. Doesn't really matter what caused it.
Exactly.
The technicals show us why it matters.
Okay.
And
Cool. Mark,
you know,
you're
in terms of
go ahead.
what other impulses could trigger things, I mean, all of the same outside forces that we've been watching for years: the economy, right, inflation reports, and unemployment, the interest rates, the geopolitical environment, the U.S. domestic political environment. All of these things have an impact on the market.
Speaking of interest rates, another one from Paul. Do the term coins coincide with interest rates?
Often they do in the market. You know,
Yeah.
Often they do.
Absolutely, the market is sensitive to interest rates.
Yeah, and usually there's a weird counter trade. So when there's an interest rate change, and I've been looking at this for years, and I still don't entirely understand it. But you would expect that, for example, lower interest rates would drive interest in the market, and they do on average. But as soon as the interest rate change comes, like as soon as the interest rate drops, it generally triggers a recession. Or, you know, I put it another way, the interest rate drop is usually immediately preceding a recession. These might not be causally related. Again, it's just a weird trend. But that recession can either be, you know, is usually rather short-lived, right? Over the last, we haven't really had a really bad recession for quite a long time. And so there isn't like, you know, an enormous amount of data to base this on with respect to how it's going to impact cryptocurrency charts, including and especially Bitcoin. But yeah, there's generally an unjustified counter trade, or you know, illogical or irrational counter trade that happens, and then the market picks up after that. But there's a bit of a lag time. You don't really want to be, you know, scalping, you know, interest rate, you know, interest rate. You know,
Changes.
announcements, because it just doesn't work that way. It plays out over a very long period of time.
But those tend to be, depending on your long and short bias, buy/sell the news, execute the remainder of your trade on the event.
Exactly. But yeah, the other thing I wanted to point out, and I know that we're slightly over time, but I can do this really quickly, was that we've had this channel, you know, set up, I think, since just before the Ethereum surged up during the ETF speculation. And I said that, you know, I think it would be, you know, if you did take this trade and sold your Bitcoin for ETH at the bottom of this channel, that you should probably start cycling back out of your ETH position back into Bitcoin. And if you took both of those trades, you would have done very well. And you know, ETH has continued to trend down, but notice that as a part of the, you know, trend within a trend, it really does look like this is, you know, about to break bullish. And you know, Keith and I both said that this is a fairly well set up bull flag.
Right.
And
that's with another bull flag at the tip, right?
With another bull flag at the tip, exactly. Like it's got this very fractal like pattern in it. And so, yeah, ETH looks like it might be, you know, might be beginning to set up its rally versus Bitcoin. And I have no idea what this means in context of the US dollar. You know, it could be that both ETH and Bitcoin will break up. It could be that ETH breaks up while Bitcoin breaks down or continues sideways, is generally how Bitcoin likes to do it when ETH is rallying. But yeah, it is an interesting data point that
you know, lots of speculation over what that ETF is going to do. Just like everything in this space, you know, I don't think it's going to have nearly the volume that the Bitcoin ETF did, but I do think it's going to be significant. You know, Grayscale also has an ETH product that is converting similarly to the way that their Bitcoin Trust converted.
Right.
I have no idea what the fee structure is. New CEO coming into play. No clue what that product looks like. So, it seemed that in the instance of the Bitcoin Trust to ETF conversion, two notable things. The number one, the length of time that people were that coins were locked up in those products, which were already, well in profit. And number two, the fee structure that forced people out the door from Grayscale. And so will they have the same fee structure in this situation? So I would be kind of surprised if they did at this point, like if they didn't learn any lessons the first time around. If they didn't,
I feel like they make so much money from people exiting that
right, that may have been the lesson. So that'll be proof that that's just their revenue model, is to go ahead and force a bunch out the door and start fresh. Generate a few $100 million in fees and then start fresh. We'll see. But I think it speaks well for the long-term view of ETH, even though I'm not really an ETH fan at all. And, debating that product is a show in itself that I don't want to have. I'll let somebody else do that. You and Koryo can discuss that. But I think long term, I mean, look what happened with the Bitcoin ETF. Obviously, it's resolved itself to the upside despite a short-term correction.
Yeah, and again, like this isn't. I'm not an ETH maximalist or a Bitcoin maximalist. I'm not a maximalist on anything in my life. I'm a pragmatist. I'm just trying to point out that there are, the market is evolving, I think, in a relatively predictable way. Like despite all the bearish, forethought that I've sort of shared with you, I think that what we should also expect is a lot of sideways boring stuff. Like it's one of the things that the market hates more than anything else. Is when Bitcoin just doesn't do anything exciting. Like going up or going down, and when people start to lose interest or become frustrated. And this is when, typically things like Ethereum and XRP start to do something more interesting. But we'll see. It will be an interesting few weeks for sure, and happens to fall on an election year. So, again, historically, this is good news.
Exciting
it's a good
times
time
all
to watch
around.
the charts. There's opportunities either way, right? There's no matter what you trade, you'll be able to find something here.
Watch the charts, but also I'm just going to say it for those of us that like to watch the charts but don't know what we're actually looking at. If you're a new trader or new to this at all, I know a lot of our viewers, and I can tell by the comments and the questions and things that a lot of them are experienced traders. But if you are new to this, you're watching the charts, you're looking at your, favorite accounts and things like that, just be cautious there too. We always say in our calls that sometimes no position is still a position. It's still making a move and doing something. It's a strategy, right? And I personally definitely recommend kind of keeping an eye on these guys and Koryo. He's not here, but the different narratives and kind of just what you're looking at. Because although we only do this once a week, there's still plenty out there. I shared it earlier. Keith, you're doing so much, for all of the traders out there in terms of your analysis. So I have to give you that special kudos. And Mark, thank you also.
I appreciate it. Every once in a while, I get it right.
You guys are awesome. Thank you so much. Thank you to all of the viewers. We will see you next Tuesday. Hey, by the way, this was our 50th episode and our 1 year. So I know that it's been a little bit over because it was put off but happy anniversary to my trader, I want to say you say work husband, you know what I mean? But I won't do that. Instead, yes, yay for us. The band is together. It's been for a year. So thank you guys.
All right. Awesome. Looking forward to doing it again next week. Looking forward to catching up with Koryo too. So Koryo, come back, man. We need you.
We'll talk to you guys soon. Thanks everyone for tuning in.
All right. Cheers. Have a great week, everybody.
Thank you.
See you guys.